You're listening to AI Prism from Seoul Economic Daily.
It's Tuesday, May 19. I'd like to share some thoughts about CEOs. Imagine having billions to deploy for an acquisition, but you know that if you buy exactly 0.1% too much of a company, your whole strategy gets frozen in a federal review.
Right. It's completely bizarre.
It really is. And it's just one piece of the puzzle we're looking at in today's deep dive. We're getting into how capital allocation here in Korea is basically colliding with these soaring labor and borrowing costs.
Yeah. I mean, if you're an executive modeling out CapEx right now, you can literally just throw last year's playbook in the trash.
Exactly. So let's start with that 0.1% threshold. Uber and Naver are teaming up for an 8 trillion won, or $5.7 billion bid for the food delivery giant Baemin.
Right.
But Naver is deliberately only taking a 19.9% stake.
Yeah, it's honestly brilliant regulatory engineering. So in Korea, if a K-ball, one of those large family-run conglomerates, acquires 20% or more of an unlisted company, it triggers this automatic mandatory merger review by the Fair Trade Commission.
Oh, wow. So by stopping at 19.9, they just completely bypass that.
Exactly. It's like driving just under the speed limit past a speed trap. You don't trigger the cameras, and, well, they need to move fast.
Because of Uber's bigger endgame. Right. The 10 trillion won, or $7.1 billion plan to swallow Kakao mobility, too.
Right. And if they pull that off, combining ride-hailing and food delivery, Coupang suddenly has a massive rival.
Yeah, they really do. So that's the digital platform side of things. But the physical infrastructure side is seeing massive shifts too, right?
Oh, absolutely. You can't run these platforms without data centers, and the hardware for AI is just pushing power grids to the brink.
Which brings us to LS Group. They kind of quietly secured the AI data center boom with this record 4 trillion won, or $2.85 billion contract with Meta.
Yeah, and the secret weapon there is actually something called a bus duct.
A bus duct, like for power.
Exactly. Traditional server farms use, thousands of miles of heavy cabling, but AI accelerators run incredibly hot.
Right, the power draw is insane.
Yeah, so those old cables become a massive fire hazard. Bus ducts replace them. There are these rigid, highly efficient power distribution grids built right into the ceiling.
So it's like a high-capacity power highway overhead instead of a tangled mess on the floor.
Exactly. It solves the fire safety issue and basically cements LS as a full-stack global supplier for the next decade.
Wow. But, I mean, building out that physical infrastructure isn't cheap. And it seems like that's forcing the software side to consolidate.
It really is. If you look at enterprise AI vendors, just two companies, OpenAI and Anthropic, now command 89% of paid AI app revenue among private startups.
That is a serious duopoly. So if you're a C-suite executive listening to this, you really need to pay attention.
Yeah, because both of those companies are definitely going to raise prices ahead of their anticipated IPOs.
Right. So you have to build aggressive renegotiation clauses into your contracts, like right now, before AI becomes this unmanageable operating expense.
Right. And speaking of unmanageable expenses, your technology costs aren't the only thing you have to worry about. There's this fundamental shift happening in Korean labor.
Yeah, unions across major cables are demanding that fixed percentages of operating profit, usually like 15 to 30%, get paid out as mandatory bonuses.
Which is a huge deal.
Wait, I want to pause on that. Because a union demanding a bonus just sounds like standard negotiating. Why is this considered a structural threat?
Because it attacks the foundation of the traditional Korean Hobong-jae system, which is a seniority-based pay structure.
Okay, how does that work exactly?
Well, historically, it guaranteed job security and steady base pay, but it relied on flexible bonuses to act as a shock absorber during economic downturns.
I see. So if a company has a bad year, they shrink the bonus pool so they don't have to lay people off.
Exactly. But if you legally mandate a fixed cut of operating profit, you destroy that shock absorber entirely.
And I guess you also strip management of the authority to reinvest that profit, like into those new data centers or paying down debt.
Right. You're turning a variable expense into a structural fixed cost. It's escalated so quickly that the Central Labor Relations Commission is having to mediate immediately.
And losing that cash flow flexibility is incredibly dangerous right now, especially with borrowing costs spiking.
Oh, the timing is terrible. Korea's 10-year government bond yields are up 0.853 percentage points this year.
Which is the fastest rise among any major economy globally.
Yeah, faster than the US or Japan. It's basically driven by two colliding forces. First, the market is pricing in a semiconductor growth premium.
So they're betting that strong tech exports will stop the Bank of Korea from lowering rates anytime soon.
Right. And second, the government is doing a massive fiscal expansion to stimulate the economy, but they haven't signaled any plan to use tax revenues to actually pay down debt.
So bond investors are demanding higher yields to take on that risk.
Exactly.
It's really a perfect storm. So if you're planning CapEx or refinancing one-denominated debt, long-duration capital is just significantly more expensive.
Which brings us to the ultimate question for any executive operating here. We've mapped out how M&A is heavily regulated, AI infrastructure is super capital intensive, labor wants rigid profit sharing, and borrowing costs are soaring.
It really makes you wonder, if the domestic environment gets this rigid and expensive across the board, are Korean conglomerates going to start moving massive infrastructure projects or even their headquarters entirely out of the country?
Yeah, it's a real possibility if the math just stops working here.
That's today's AI Prism, CEOs. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a 1 IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.